HSBC. The stock's come down quite a lot, obviously, over recent weeks because of the selling in the Hong Kong market. Lehman Brothers cutting its pre-tax profit forecast for HSBC to £5.025 billion from £5.275 billion. Also cutting its recommendation to an outperform from a buy that it had previously on that stock. Analyst Robert Law also cutting the recommendation for Standard Chartered, arguing, though, that the recent sell-offs, as far as the stock's concerned, rather excessive, a little bit of an overreaction. But clearly the big concerns here are exposure to problems in the rest of Asia. Just a note on HSBC. The company announced late yesterday, that it's merging two of its insurance operations, HSBC Insurance and HSBC Lombard Insurance Limited. That merger part of streamlining efforts. Back to you.
All right, thanks, Geoff. And Philip, you wanted to comment on one of Geoff's stocks to watch?
No. I was just saying that GSM is a European standard. It was created in.
And then you also have the CDMA.
Yeah, CDMA
which is a US standard.
Yeah.
And then you also have the VCD for video and VHS.
Yeah, nothing to do with telephones.
Nothing to do with telephones. Nothing to do with telephones. There's just so many formats coming out right now.
Right.
All right, let's now take a look at the red chip sector in the Hong Kong stock market. It has taken a beating. So far this year, it's down 44.5%.
That's right. That's right. Well, I mean, it's it's basically come back along with the rest of the market. But more so, it actually was coming back before we saw the fall in the HSI. With the red chips, though, the premium basically that people were giving to these stocks, because there was asset injection stories going on all of last year.
Will that continue?
The asset injections will continue. I mean, we've already had in the last 2 months, we've had 6 or 7 deals right from the major red chip stocks. Admittedly, it's going to slow down, but it will carry on. Because these companies still have to grow, either organically or through acquisition, and they did that even before we had the red chip fever last year.
What about the restructuring story for the 8 shares?
Those will take longer. Yeah, I mean they were catching the attention last year, but they're going to take much longer than the asset injection stories, because the asset injection stories are sort of up and running. The restructurings take longer because you've got different ministries involved.
Hong Kong stocks have been battered over the past 6 or 7 months, down about 100% from its all-time high of about 16,800. Which stocks right now would you recommend? Could you give us some specifics?
If I was going to recommend the Hong Kong stocks, really just conglomerate stocks, CITIC Pacific, Hutchison, right? Because they still have good exposure. They have good exposure to Hong Kong, but also good exposure to China. Not heavily in debt. They've got good resources. I mean, strong balance sheets, and a wide array of businesses, right? Which is going to protect them on the downside. For red chip stocks, I would still look at the very good quality ones like China Resources, Guangdong Investment, Guannan, and Feng Hong, because they have. Feng Hong, Guannan, they have fairly recession-resistant businesses. I mean, the food manufacturing, food distribution, etc. Very strong.
Philip, we'll have to leave it there. Thank you so much for joining us this morning on CNBC's Morning Call, and hopefully we'll have a Happy New Year.
And you. Thanks.
Our guest host today has been Philip Chan, Research Director at Shenwan Wango Securities, and our guest host tomorrow will be CK Kong, Vice President at Credit Suisse, First Boston. And we'll take the short break, and Geoff will tell us what's up next.
Okay, Rico. Well, as the famous singer Barry White might have said, we're going to talk electronic love after the break. Don't go away.